Hopefully the angle is right. We was back with another video, man, and I've been delaying it long enough, but I'm finally break down my Forex day trading strategy. Yes, yes, yes. Round of applause. Finally. Cause follow the socials, but that's where I post like behind the scenes of like the trade recaps. And so a lot of people ask me, like, what strategy, what do I use? How do I even start day trading? So that's why I made that last video on how to start. Hopefully that helped, you know what I'm saying? But this video, I'm gonna talk about my Forex strategy. You know what I'm saying? What switched me to be profitable. You know what I'm saying? So with that being said, man, let's just dive straight on into it. So before we jump into the charts, I guess I could tell y'all what the strategy is first. You know what I mean? The strategy is basically liquidity sweep, imbalances. The main thing is wait for draws on liquidity to get swept. Now we look for confirmations that we either gonna target the next draw of liquidity, like say if we break a high or break a low. You know what I'm saying? Wait for confirmation, confluence to see if we're gonna either sweep that and go back up, liquidity grab, or are we gonna, you know what I'm saying, keep going down to take out other draws on liquidity. So that's pretty much the basics of it. You know what I'm saying? And to couple that with London session manipulation and reversal or continuation. But London session always is going to manipulate. It's either going to go up or go down. You know what I'm saying? Then have its real move. And manipulation can somewhat be considered a sweep. It may be like a small manipulation, like on a 1 minute time frame on my last trade. We came up and we swept some highs in pre-market, and London just tapped into the fair value gap and continued downwards. So I mean, like, that's a manipulation up until some imbalances to get a reaction. You know what I'm saying? Because anytime a new session opens, new money enters. So prices has to manipulate something. You know what I'm saying? Or we just gonna straight dump down. But if you go down to a lower time frame, you'll find it. Because the wicks tell you everything. So once you know the strategy on paper, liquidity sweep, imbalance, or if I don't get a liquidity sweep or an imbalance of a fair value gap or some type of SMT, anything like that, I will look at the previous session, London session. I see what highs and lows make sense to get hit, and 9 times out of 10 there's always a fair value gap right there. So I just wait for a fair value gap to get tapped into and I enter, target the lows or the highs. So that's pretty much it. I've been using this strategy for the past two and a half months now, with a 43% win rate, a minimum of a 1 to 2.5 risk to reward. Can't complain, man. Cannot complain. And I bought a new you know what I'm saying, funded account, and we just passed phase 1. Yes, I bought a 2-phase. Whoopty fucking do. But we just passed phase 1. So now we just gotta make another 5%, and then we'll get that certificate. But like I said, man, I'm gonna throw y'all to the actual charts and show y'all the strategy. You know what I'm saying? Alrighty, boys and gals, if there's any gals watching, you know what I'm saying? But let's just jump straight into it. We're gonna jump up to a higher time frame. I'll explain my trade recap in a second, but let's just go ahead and remove everything so y'all just looking at pure charts. You know what I'm saying? Pure candlesticks. We are on a 1 hour time frame because the candlesticks look a lot more clear for the beginner eye. You know what I'm saying? But like I showed y'all in the previous video, we got market structure. So there's a high point, there's a high point, there's a high point, right? Here's a low point, here's a low point, and here's a low point, right? So let's just say we started off after this downtrend that we get, boom, right here. This low, my phone's in the way, that's why I'm looking like that. But this low right here Damn. I don't want that to be like that. Fuck it. This low right here that I'm circling, that right there is a low. It's a structure point, right? Sweep work right here. Price news comes out. We get the reaction. We get a reversal. Come all the way down. We swept this low right here. You could have entered in the buy positions, right? Now, once we sweep the low, this is the 1 hour time frame, so I'm pretty sure there's fair value gaps on the lower time frame. So let's just use the 1 hour time frame and specifically, you know what I'm saying? So you're waiting for your bullish confirmation. You know what I'm saying? You gotta, I can't stress this enough, you gotta use all time frames. So in order to catch this full move, you gotta scale down to a lower time frame, right? It's the only way. But if you don't, you could wait the 1, 2, 3, 4, 5 hours for this real bullish engulfing candlestick. You know what I'm saying? And it's also a fair value gap. And why is that a fair value gap? Because, let me zoom in, man. This gray candlestick right there, the wick stops right there, right? So from this first candlestick, the second one, and the third, there's a gap between the first candlestick's wick and to the body of the next candle, to the third candlestick. There's a gap right there, right? See, this right here is not a fair value gap. This wick off of this gray candlestick touches the body of the third candlestick. This first candlestick's wick does not touch the body of the third candlestick, so therefore there is a gap, a imbalance, fair value gap, right? That will be your bullish confirmation off of the sweep of this low. If you didn't scale down to a lower time frame to find one a lot sooner than that, you know what I mean? So let's just say you didn't scale down, you're staying on the 1 hour time frame, right? So now you want to look for a take profit point, because your stop loss would be after this fair value gap forms. So right here, your stop loss should be at least down here. You know what I'm saying? I can't pull it up because it's gonna bring back all the other drawings. But your stop loss should be down here. You know what I'm saying? Take profit could either be at this high, this high, this high, or this high. Whichever one you choose. You use your Fibonacci retracement, you know what I'm saying? You might get a better take profit closure, right? Because as you can see, all three levels got smacked regardless. And what happens once we took out all them liquidity points? Reversal. Because now that we took out this low and took out these highs, we now have sell side liquidity. So 1, 2, 3, 4. Those are all draws on liquidity to the downside. You know what I'm saying? That you could target, right? This whole trend line. What do? Wait for my bad. Wait for confirmation. What happens right here? We get a fair value gap. Also, this looks like new day opening gap right there. But I think it got filled. Yeah, it immediately got filled. So we're not gonna count that. But 1 hour fair value gap right here. What you could do, you could either be aggressive and enter off of the formation of it, or you could have waited for the come down, pull back. So the next 4 hours, it would have pulled back up into that. And then we get that huge sell-off. Right? And you could target from this point way up here. This is an extreme draw on liquidity, right? These lows right here are low resistance, right? Because all of the fair value gaps that were created off of these movements have been tapped into and been traded. So this is going to be high resistance liquidity, low resistance liquidity. And that's pretty much just another way of saying which lows make more sense to get hit. These or this one way down here. Obviously these, you know what I'm saying? It's not that far of a move down. You know what I'm saying? It's not overextending price. You know what I'm saying? So that is low resistance liquidity, high resistance liquidity, right? After a sweep of this low, you could enter here, sweep work, targeting these highs. Because after this, there's really nothing else down here. Everything down here is like gambling. You know what I'm saying? But once you sweep out session lows, it's like, okay, now what's next? Session highs. So we have these three. Came up, swept all of those. Now what's left? Lows. Came down, swept these three because these was what? Low resistance liquidity. We didn't come all the way down and sweep out the high resistance liquidity, but we will eventually. You know what I'm saying? So boom, came off of that, swept these low resistance liquidity, and then what we do? We immediately had to move back up, tapping back into this massive imbalance, which I wouldn't recommend ever trading an imbalance like that. You know what I'm saying? But this is the 1 hour time frame, like I say, so I had to correct myself. On a lower time frame, you could trade this, but on the 1 hour time frame, I don't know, my friend. But that's all that. There's no really more sweeps besides this right here, but this was a news candle, so I wouldn't really count that. So let's see if I can find some more, which I know I can. Right? This right here, even though this is a news candle, it's still a valid sweep. Huge sell-off, right? Boom, this was the low point. Starting to have a bit of a pullback. Not really though, came down, swept it, boom. I actually lost a trade in there, I'm not gonna lie. Because I was expecting us to keep going down. But, you know what I'm saying, it is what it is. I was not trading the liquidity sweep and imbalance strategy right there. Because like I say, my setup doesn't have to appear every single day. I know how to adjust and adapt. Like I say, the market is going to move up and down, right? Whatever makes sense. I mean, shit, it's going, like, bro, let me pull up drawings back up. Right, hold up. Jump down to the 15. Right? Honestly, this trade in particular, the one that I just won, that I passed my funded account with, right? Let's jump down to the To be fair, on a 1 minute time frame, that looks absolutely gorgeous. But from the time that I entered, there was no liquidity sweep. There was no, you know what I'm saying? It was straight imbalance. And I entered off of the imbalance that was created. And I just I was looking at that price on a 5 minute time frame, and I'm looking at these 5 minute lows, right? I don't know what happened. But I'm looking at these 5 minute lows and this low right here. This right here, these two, low resistance liquidity, previous Asian session lows. I knew these were going to get hit regardless. You know what I'm saying? This right here, this was overlapping New York and London low, I think. Yeah. So that was my final take profit, the extreme draw on liquidity. So my final take profit, I had one take profit here, and then second take profit was here. So obviously, like I say, there was no sweep besides pre-market sweep, but there was no London session specific sweep, right? It was just London pretty much manipulation. And you could have entered off of the sweep of the New York and London session overlapping lows, because this is London manipulation reversal. I just targeted and traded London manipulation because I wasn't finna wait, you know what I'm saying, and miss out if we was to blow past those lows. So I was like, okay, I see an imbalance on a 1 minute time frame, I'm going to enter. Had to take profit one here just for, you know what I'm saying, cushion, so I couldn't lose. And then take profit two was all the way down here. Easy money. You know what I'm saying? And that's a representation of just London manipulation. My main strategy is a liquidity sweep, so if I was to really stick to my one strategy and not be adjustable and adaptable, I would have waited for the next 45 minutes. I would have sat on my hands for 45 minutes in the market open. and waited for this sweep of this low to reverse. I'm not doing that, because even then, that's staying up till 5 o'clock in the morning, my friend. I'm not trading that long. I'm trading that London manipulation, that London open. That's what I trade. And that's really it. Sometimes we get a sweep of London and sometimes we don't. If we don't, oh well. But on that 1 minute time frame, that shit looks gorgeous. I even had a second position that I entered right here. Just to be good, like, this right here, this move down confirmed it. I'm not gonna lie. I was like, okay, boom. Second position, enter. Take profit on that was at this yellow line. And then overall take profit for the big position was up here. You know what I'm saying? And that's really all it is to it, man. Wait for a price to take out a high. Even here, take out a high, we move down. We wait for the reaction. We sweep this high with a news candle. And that may not be a news candle, but we swept this high right here, had a fair value gap, tapped into the fair value gap, and we dumped down. It's pretty much that easy, my friend. And like I say, fair value gaps is a 3 candlestick pattern. 1 candlestick, 2 candlestick, 3 candlestick. The first candlestick's wick cannot be touching the third candlestick whatsoever. If it is, no fair value gap. If it's not, fair value gap. Liquidity is a sweep of some highs and some lows. Liquidity, sweeping market structure. You know what I'm saying? SMT ski. SMT is when one pair breaks a high, but the other pair doesn't. You know what I'm saying? And 2 correlating pairs with Forex, Euro USD, and GBP USD. They pretty much move the exact same. So if GBP breaks a high and Euro USD doesn't, but it's coming down, go trade GBP USD and trade it to the downside. That's how SMTs work. Fair value gaps work the same way, and there's also inverse fair value gaps. So let's say right here, this right here, this orange candlestick, let me zoom in. The orange candlestick, the gray one, and this gray one. There's a fair value gap in there, and it gets inverse when other candlesticks close above it or close, you know what I'm saying, in the opposite direction that it was going. So that's a that's a bearish fair value gap when it's going down. Price is going down, there's a gap, bearish fair value gap. It does not get inversed until the bullish candlesticks close above it. And it's vice versa for bullish fair value gaps. It does not get inversed until candlesticks close below it. You know what I'm saying? That's pretty much it. You know what I'm saying? And to conclude the video, man, again, let's break it down. Liquidity sweep, imbalance. Liquidity sweep, highs and lows. Imbalance, fair value gaps. Inverse fair value gaps. Right? And if you don't get a liquidity sweep or imbalances, what is what else? What was the other strategy? Manipulation, London session. It has to gain when a new session opens. Like I say, there's new money. New money is gonna want new price action, right? Or it's gonna want to continue the price action, but before it continues, it has to sweep out some type of, you know what I'm saying, high or low. Wait for that sweep, target it, boom, in the trade, bro. That's really all that I got for y'all, man. Again, hopefully these videos are helping, and I think I went over a recap of the last trade. If not, I'll drop a video on the recap of the last trade. And good luck to y'all boys on y'all fundings, man. Hopefully y'all are passing them. Hopefully y'all are staying consistent, staying disciplined. You know what I'm saying? And I catch y'all boys in the next video, man. Y'all boys stay blessed.